Hey traders, going to do the market internal review for July 26th, 2023. So today we had FOMC, Jerome Powell coming out to discuss the rate hikes on the horizon and what percentage their increases are, if any. They announced a 0.25 additional rate hike percentage. So today, with the gap down about $1 on SPY and FOMC on the horizon at 2 p.m. Eastern today, I was certainly looking for chop and looking for little movement. If you've reviewed FOMC past days, that it's typically really slow, melty kind of moves in a very tight range. And I'll say today, actually, I was surprised because once we got through the morning chop here, this clear box of just wicky, nasty candles and low tick, I mean, no tick 500s save for like one until almost 11:30. I was surprised, however, that we actually started to make some rather decent moves. And by decent, I mean decent for this low VIX, FOMC, looming day and environment. We had a $1.07 move. I was posting on Twitter throughout the first half of the day, sharing my ideas. With AD and VOLD on the bullish side, however weak they may have been, we'll review that later. I was mainly setting up to look for longs to be in favor of price and volume of the New York Stock Exchange. And I'm also reviewing tick as well. I don't want to long a tick high extreme break, although I don't really call 500s extreme. I'd rather see 800,000 or more. And then with trend showing in a balance, these yellow dots here, that's even more indication for me that I'm not going to look for any kind of long trending move, more a mean reversion type setup. So establishing a range, it was my first observation, was where are my highs for at least the first part of the day until Jerome Powell comes out, and where are my lows. So I'm also looking at the standard deviations on TiWAP to kind of determine where the deviation reversal might come in for a mean reversion setup. And while we broke the second deviation low here, the setup I took here for a long was, and I have many reasons for it, which I'll cover a little bit later. But looking at this one here, we got tick closures coming back from underneath here, crossing over zero, and then the AD and VOLD are green. Starting to see their trend flip here on the 20 SMA, which is what these triangles indicate here. So seeing that, I went long, and I was aiming for something a little bit higher. There was a previous high a day as well I thought could be a good target. Now, I think that was a little bit foolish of me because with FOMC on the way, the idea that we would get all the way to that price before FOMC may have been a little ridiculous of me. The interesting theory, I guess, I had partially behind that was thinking perhaps the designated market makers would run price up this high to create stop liquidity and whatnot, throw one side of the market off to make a little money on the FOMC dump. So anyways, this trade didn't really work. I didn't even get my second standard deviation high. It was no big deal. Anyways, this whole setup here, though, we clearly have a reversal type setup. We make tick high, and we get a divergence from the other tick high, which then, that's been a pretty good signal to have a reversal, which is exactly what we had. And we bring it right back down to this low area, second standard deviation. The other important thing to look at is, what are these bands doing on the TiWAP? If you've got those on your charts, are they expanding? Are they contracting? What's going on with them? And you can see these ones are just straight as an arrow. So that just really confirms that trend is giving the right reading, and that SPY is largely in alignment with the New York Stock Exchange, which is good if you're using all this to trade and you're using it to try to find the high probability entries. We want alignment. If SPY is off doing its own thing and it's illogical in accordance with what you're seeing on the internals, then that's not as favorable if you're trading with the market internals. We had many low taps down here, and we had the high a day up here, and we also had some other things. So for myself, my setup, I'm watching AD and VOLD are still green, although price is declining. That's why the band has darkened, it's dimmed, and we also see the 20 SMA trend is showing us a red downtrend. Even in spite of that, I know that if I try a long from down here at low a day, it's a higher probability given where price and volume are. So this was a fantastic setup. The internals also really started to, even though we have all this activity, see how they're staying right within that first deviation. And we get these really tall wicks here right off of this TiWAP level, 453.85. So really strong support. If we turn on tick levels, we're not going to see much. We get this bear tick level, and then we get this guy right here that's been tested pretty much the entire day. We get this crossover of 0 on average tick, and we get one more bear tick here, barely breaking the 500. And yeah, this was pretty much a clear setup for me. High probability, low risk. My stops could be really close, and the reward, I was just very certain that we would see previous high a day and a couple of other things. So it worked out really well. I don't know what this total move was. So about $2.30 move. I used a pre-market high and some other things, so I didn't capture the entire move. The spreads on FOMC are always really wacky, especially for options. I know they are for futures and other things, so I wasn't interested in trying to hold it for some insane move. I didn't think it would happen, but I just wanted to try to grab a piece of it. So really happy on the day with this, and the read of the internals was perfect. We get these extreme tick closures. This one here, this one breaks the first standard deviation, and it busts through pretty much the entire rest of the morning. So that close is over all the other candles. So that's one heck of an engulf. And then everything's on the uprise. We see the price of New York Stock Exchange is starting to brighten, and we get that 20 SMA flip early before the engulf even happens. SPY actually has a down closing candle on that. And then we get these two other tick extreme closures up at the highs. We're past yesterday's tick, past yesterday's TiWAP. We're breaking through yesterday's ending first standard deviation, and we nailed previous high a day. So we're also clearly out of all the standard deviations on this session. So just an immense strength breaking move, breaking through so many things. That's a clear time to get out. Or at least trim aggressively and keep a small runner, maybe break even or slightly into profits. But that depends all on how you trade and how you manage everything. It's obviously with FOMC, it's incredibly risky, but that's how I read everything today. The dump afterwards, honestly, I know there's a lot of discussion on how to fade the moves and whatnot. You can find it on Twitter pretty easily. This one, I think, mostly could have been a decent catch when we break back into second deviation and we get this extreme closure signaling a potential into the move. You can see immediately the ad showing the NYSE price is starting to reverse pretty quickly, right? We go from bright to dim within 1-2 minute bar. So even if you got in at the down close of the first deviation, you still have TiWAP and the lower deviations to trim. So that's still some pretty good room there. So you maybe could have caught that. We get one bear tick extreme here at negative 1,000, potentially signaling the end of the move, which is effectively what happened. We kind of consolidate right here under that tick level, not willing to go below this second deviation low from yesterday at 453.8, which is pretty neat to see just how strong these levels really work. And then we almost close right on the cent at yesterday's TiWAP price. So incredible setup, I think, with these TiWAP levels. I'm going to show you some really insane stuff with something else I've been reviewing on these videos, but I'm kind of putting it all together as more of an intraday analysis guide for myself. If we look at the internal chart, so trend, we already know from MIT, pretty much balance all day. We only spent about a half hour, I think, out of balance, and it was weak area. I don't like it when trend is in this area or this area. Much rather it be over here or over here and get there fast. So we didn't have anything like that today. So this was reversion city, just back and forth. But if you look at the ad, so here's about where FOMC, the 2:30 time, you can see we just really have an insane pump on liquidity across the New York Stock Exchange. And we get these insane wicks here, and that quick reversal right back down to one of our old levels that we have at basically 613 stocks in advancement. So very fascinating to see that. Now VOLD, on the other hand, VOLD, I'm beginning to think that the VOLD, the volume of New York Stock Exchange, is a much more important read for bullishness or bearishness or direction. The VOLD seems to have the heaviest weight and the heaviest effect on what is actually going to happen. And the nice thing is that if the VOLD is showing bullish volume pouring into the advancing stocks, then and the indexes are not following suit, I'm not going to say it's guaranteed, but a lot of times I will anticipate that the index will align eventually. And those anticipatory entries have been really amazing, because unless volume starts to reverse and the index finally starts playing ball and aligns itself to the New York Stock Exchange, it's incredible the kind of entries you can nail just using the VOLD analysis alone. So another incredible looking chart here. As soon as 230 hits, the J power kicks in and we get all the way up into here. And so it was really nice to see that we actually held this bullish volume area into close. So that gives me some hope for tomorrow, maybe seeing a little bit more bullish action, but we'll just have to wait and see. Qs was annoyingly weak compared to the other indices. I'm going to turn MIT off, I think, when I go to review some of these, since we've already reviewed it. So the gap zone here, we had, I think it wasn't as much as SPY. Okay, it's basically about as much as SPY, about $1 gap down. And this zone here just really held back the Qs for most of the day. We had a couple of old levels from old market internal review videos. We bounced around on those, pretty much wicked right on TiWAP here at the height of the FOMC pump. And we did not end on yesterday's TiWAP price. We finished a little bit below within the first standard deviation of the current session. So I'm still viewing this as somewhat weaker than the rest of the indices, but I do find it somewhat comforting in the fact that even though from the gap down we closed much lower, like $1.30, we actually, where we opened to where we closed was only a 17-cent difference. So this is mostly a neutral day, but still weaker. If we look at the Dow had a gap down, pretty aggressive one, although the Dow's been much stronger than the other ones, holding much higher price. All the indices seem to have opened with about the same size gap, so $1.16 gap. But the Dow quickly retraced and held that and much more. So they actually had a very good day, a lot stronger than the rest of the indices. And the Russell was even better. Amazingly, the Russell had very little gap and just ripped right out of open, reclaimed TiWAP and much more, and bounced on yesterday's TiWAP many times. They finished up the day, I want to say up like $1.50. Okay, $1.72. Yeah, so they strong, very strong index compared to the rest of them. Although I think SPY's pretty much in the same league. I would have liked to have seen it a little bit higher close, but they did close and fill the gap, so should be pretty interesting. So the other chart I wanted to show you, I'm going to close MIT here. So if I close my notes, so I have 3 different TWAPs here. I have one for the session, I have one for the weekly TWAP, and then I've got one for the monthly TWAP. All of the target levels for the weekly are the green dotted lines. All of the target levels for the monthly are the orange dotted lines. And the weekly TWAP is green. It's not color-coded like the session one. And the monthly is orange. So what I found so fascinating was how price on SPY was hovering and oscillating right around the weekly TWAP price. So the weekly TWAP restarts on Monday, and I've been somewhat more bullish on SPY because we've been holding that weekly TWAP, and the session TWAPs have been closing slightly above since Monday. They're mostly in sync, and then we're above. And what I noticed here was a couple things. So drawing a range, a fib range, between the first upper deviation weekly TWAP level and the weekly TWAP level here on the SPY. So this would have been for last week's TWAP price. Yeah, so right here. So drawing a fib on that, we were bouncing basically all day right around that 0.5 to the golden pocket 6.1 and 6.5 area, which I'll show you here in a second. But what was even more crazy to me was these 2 rejections we had early in the day, this one and this one, literally to the cent. The high of this candle is 455.13, and so is this one. And that TWAP price there on the weekly from last week is 455.13. So literally on the nose, rejected it. And then even after FOMC here, the low of this candle is 453.38, and last week's TWAP is 453.37. Okay, so 1 cent off, but that's damn accurate. Just amazed at the accuracy of that. And even these candles here between the wicks and the close and the open prices, we're talking pennies of a difference between that second deviation upper price there of 456.88. So phenomenal. This was another reason I took longs here. So I'm watching the other chart, and I'm watching my multi-time frame TWAP analysis setup I'm starting to test out here, and I went long here. And like I said, I was holding for the second deviation high and previous high day price, and I used this as confidence to take that entry. We just didn't quite see it. We rejected right off this level, and it was fine. It was really great to see this bounce. It was really cool to see this tick high here reject on the cent on this price level, and then to see the FOMC. Jay Powell, he's started his speech, and just to see all these golden pocket fib tests here, and to see that wick, just incredible. And then to top it all off, yesterday's TWAP price is essentially where we ended. That tick high is, or wick high rather, is 455.54. And the TWAP price yesterday finished at 455.54. So they wicked it perfectly. crazy to me. I've never been more confident in this tool as a way to measure statistically probable moves for SPY or the main indices. I just wanted to share this with you. I'll probably do a more in-depth video on this. But that being said, even Q's had some really great setups here as well. So similar idea with the weekly TiWAPs. We have the first deviation lower and second deviation lower because Q's been more weak. And we dipped a little lower below the golden pocket here on these drops. And we're still fighting to hold that weekly TiWAP. And we're just having a very difficult time to do it. But you can see where we reject here at the high was yesterday's TiWAP price of 379.04. So we just barely peaked over that. Not as accurate as SPY, but all these wick rejections here, just very fascinating how well this aligns. So Qs are still above monthly TiWAP. We are below the weekly, but we're right on it effectively. I think we basically just oscillated on it today. It's going to be an interesting day tomorrow. We didn't fill the gap. We're right on weekly TiWAP, and we're back within that first standard deviation on monthly. So tomorrow and Friday, I think, are going to give us a heads up on what's going to happen into the rest of this month. As far as SPY, SPY's still really strong. It's holding above the first deviation on monthly. It's holding pretty well with the weekly. And I think we all but filled this gap today. So futures tonight, and it'll be an interesting day tomorrow. I'm going to go ahead and wrap it up here. I guess, well, I'll cover real quick. So Microsoft earnings, I think, plus the reweighting of the Qs. So Qs had a reweighting here recently. I don't have the information here off the top of my head as to what was actually moved around, but the top Apple, Microsoft, Nvidia, I think those were all affected. And they even had some interesting candles at the end of the day on Monday. I think it was the 24th. I think it was the 24th when that reweighting went into effect, but those ERs definitely dragged Qs down. We had decent Google earnings, but not so decent Microsoft earnings. So they had basically provided guidance saying that the AI related products and development and the profits from all that were going to come in at a slower pace. So I think with that guidance, we saw that nasty rejection. We stayed within the expected move. I don't even think we tested the low end. I think it was like 325 and we stayed around 335, but that's not helping our case. So we got Meta, Facebook earnings, I think tonight. I haven't looked at them. I guess we can check them out here real quick. Oh wow, okay. So they must have done pretty well. So maybe that'll help Qs. Let's look at the after hours on Qs. Yeah, it didn't really help Qs that much, so I don't think the weighting of Meta stock is high on Qs. But I guess we did have this nice move up at right after close. So I'm hopeful for a little bit more upside. But yeah, stay tuned. As always, thanks for watching and happy trading.